This is your LMAX exchange technical update for Tuesday, August 1st, 2017. Euro dollar. So the euro has yet to let up since breaking above a critical range high from 2015 around 117.15. The market continues to extend its run up above 118 and is now looking towards that next big psychological barrier at 120. Having said that, daily studies continue to track in overbought territory, which does warn that the greater risk going forward is for some form of a short-term corrective decline. At this point, though, we would now need to see a break back below the low from Monday, which comes in around 17.24, to strengthen the possibility for the onset of a healthy correction, opening the door for deeper setbacks before the market considers the possibility of that next higher low. Sterling dollar. Cable has extended its run to a fresh 2017 high. This time the market is pushed above 132. The focus on a medium-term basis now is on a test of a measured move extension at 135, which follows a multi-month consolidation that we had seen off the plus 30-year low from 118.40 in October 2016. That consolidation happened roughly in the 120 to 127 area. The market had finally broken out in April above 127 area, that range high at 127.75, and so that projects this move, this measured move extension, towards 135. At the same time, technical studies here are also looking a little extended. And so there is room growing now for a pullback before the market sees that next big push towards 135. The low from Monday now is that key level to watch. That comes in at 130.97 about. So a break back below there would be required to trigger this correction in cable. Dollar yen. So dollar yen continues to adhere to this range trade that we've talked about this year, with the market once again stalling out above 114. We had talked about that several days back in the lead up towards 114, doubting whether the market would really extend beyond 114 and preferring to see a ranged resumption. And we've since seen that, with the market breaking all the way back down towards 110 thus far, into the 110 area. And this leaves the door open for a continued acceleration to the downside to retest that 2017 low just ahead of 108. Euro Swiss. So Euro Swiss continues, as we're doing this update, to push to its fresh 2017 highs. The market has shown no ability to pull back since breaking out above 112. 112 had been that previous resistance that was in place from 2016. That was the highest level that the market had been trading at since the January 2015 collapse. And so now that we've broken back above 112, it's been one way for Euro Swiss, and there's really no resistance between here and 120. At the same time, technical studies here highly extended to the top side, overbought on the daily chart, which does suggest that if we do see this run extend further, it should start to run into some resistance in favor of a very overdue and healthy corrective decline. Right now, key support comes in by the Monday low, which comes in at about 113.35, with a break below there to take the immediate pressure off the top side. Aussie dollar. So Aussie dollar has traded up recently to a fresh 2017 high, but since then, over the past couple of sessions, the market has been more comfortable consolidating off that high in favor of this ongoing sideways chop before making any next key decisions. The key levels to watch above and below, of course, above that 80.66 2017 high. Below, you want to pay attention to the low that we had seen on Friday, which comes in around 79.38. A break back below there would trigger the odds for a more significant correction to the downside. Dollar CAD. So dollar CAD has recently traded down to a 2017 low after recently breaking below a critical support zone at 24.60 in the form of the 2016 low. The market now has been consolidating just off that low, and there is risk for deeper setbacks if the market can't put in a correction. Now, daily studies here are highly extended, so there is a warning for a nice correction to the top side, which could develop into something more significant in terms of a bullish development. But right now, this high that we had seen going back to Thursday, the high at 25.76 about, would be required to be broken to suggest that the market is now alleviating that downside pressure and potentially ready for a bullish correction higher. Kiwi dollar. So the New Zealand dollar has recently traded up in the previous week to a fresh 2017 high, a 2-year high beyond 75, that critical psychological barrier. Since then, the market has preferred to defer to a period of consolidation. Key levels to watch above and below here are at 75.58 above that 2017 high, and then below you want to pay attention to the low from last Friday, which comes in around 74.60. A break below there would trigger the onset of an overdue healthy correction in this market. SPX 500. The S&P 500 has recently traded up to test a measured move extension, which is a record high also, just above 2480. The market has seen this extension following the consolidation earlier this year, 80 points between 2400 and 2320, and so the break above 2400 projected the move up towards the 2480 area. Theoretically, the market should start to see a bit of a correction after testing this measured move extension, but at the same time we need to see a daily close back below recent support, which comes in around 24.58 at a minimum, to suggest that we could be seeing the onset of a correction, while ultimately a break below 2400 would be required to force a shift in the structure. Gold. So gold continues to be very well supported on dips, and although over the past several months we've seen some intense pullbacks in gold, every time it's pulled back it's been supported to a fresh high, most recently a high up at 1296, and so this latest bounce out ahead of 1200 suggests that the market could be trading back up to a fresh 2017 high beyond 1296, which would expose the 2016 peak at 1375. Only back below 1200 would compromise the constructive outlook for gold.